a narrower loss, but the guidance for the quarter next year or first quarter seems to be a bit short of analyst estimates. I think the market's still looking for some kind of clarity on just how quickly you can deliver, given the supply challenges out there. What is going to be the outlook for this year?
Well, very nice to be on the show again, Yvonne, David. I think we're operating in a very challenging environment, as you can see in China. Clearly, the industry is facing a very strong headwind in terms of cost escalation. But at the same time, because the pandemic impacting the delivery and sales network on the ground, it is really causing a somewhat narrower, I would say, delivering expectations. But we're still growing very, very quickly. We're putting out guidance for the first quarter representing, again, triple-digit growth year over year. That's on the back of triple-digit growth for the entire year last year. So I think we're still seeing a very strong momentum in our business. But we have to be very, very, ready to tackle all the challenges this operating environment is presenting us.
Yeah, you mentioned about the surge in raw material prices. When you take a look at lithium, for example, surging more than 500% in the past year. How flexible is your pricing strategy right now? Do you foresee Xpeng being able to bring down prices as soon as we see raw material costs come down?
Well, I think the material costs obviously is impacted by a number of factors. Obviously, in the short term, we see huge swings, and we expect the volatility will moderate as I think the industry operating to more normal cycles. But at the same time, I think some of the players are passing along the cost to end price customers. So the industry have seen price increases on the retail end, and we have also increased prices for our products twice this first quarter. Hopefully, you have enough the cushion to cover these price and cost increases.
Right, Brian, and on that note then, I just want to get your thoughts on where your head is really on where the demand curve is. I mean, how much more can you raise your prices without, I guess, pushing out buyers to look elsewhere?
Well, I think the cost increase is impacting every player and every make of automobiles, not just EV makers. I think traditional auto companies are facing the same shortage on chip supplies, and also some of the cost increases. And also, remember, we're in the backdrop of higher oil prices. So actually operating an EV for consumers is a lot cheaper now as an alternative to driving regular gas engine vehicles. So I think as a whole, I think the EV appeal and also the momentum of EV sales in China will still be very strong given all these backdrops.
Okay, let's talk about the other part of that equation, disruptions to production, whether your own production or your supplier's production. What are you seeing exactly right now as far as that's concerned across your supply chains?
Well, I think we have started seeing that mid last year. I think we start to see supply chain become constrained in the chip space. We start to see battery supply chain become constrained because the material cost increases and capacity constraints by the battery makers. So as a manufacturer of EVs, we had to be very nimble. So we had to take a number of measures, for example, to take on alternative source of suppliers. We have to spend a lot of money testing different vendors to make sure that we have safety net in terms of finding alternative source of suppliers. At the same time, I think you have to be very nimble around what models you present to the customers. Some of the models, because lack of certain chips, and others, you have to reduce their capabilities. So some of the models we're not selling, and we are trying to shift our production to some of the model that has more ready sort of suppliers. So those are the things as a company we have to do very nimbly throughout this cycle.
So, Brian, can you maybe clarify a little bit? Are you planning or have you introduced any new suppliers right now, just especially when it comes to some of these key battery suppliers there? Are you looking to replace some of them, just given the price turbulence that we've seen?
Well, it is known that we are, working with multiple battery suppliers, and also on the chip side, we are also finding good alternative chip supply sources as well. So for a company, I think that will give us a very strong foundation to weather some of the constraints we're seeing in the industry. And sometimes I think it will bring a cost advantage in the long run as well, because you can actually adjust your production based on the differential pricing points of these suppliers.
Well, Brian, my next follow-up then, when you look at the longer term, are there any plans to integrate vertically parts of that supply chain, particularly on the supply end?
Well, I think we are looking at technologies that give us more integrated product approach. And that's something I think as a company grows, naturally we'll consider where are the core value points that we need to incorporate ourselves. But also at the same time, although EV chain is a very long value chain that we actually have to work with strong supplier partners to make it work. So these approaches are still going to be conducted as we grow. So I think to answer your question is that we are looking at certain high technology, high value added areas that we may want to do ourselves. But at the same time, we have to work with strong partners as well.
I mean, I think maintaining competitive prices is one thing, but what else do you think Xpeng can do to try to win customers given these higher prices? Because you've already also had to cut back on giving out free charging as well. How do you entice customers at this point then?
I think you have to be the product strength. You have to produce the best looking product with the highest technology that's available to the customers in those categories, and also show we're providing something very innovative compared to the rest of the field. That is actually what we're focused on. We spent a lot of money on R&D last year. We continue going to spend a lot of money on R&D this year. And also, you can see that we're going to launch new products at a faster clip. We just announced that next year we're going to roll out 2 new platforms. And also within those 2 platforms, each will have additional models come to the market. So with new models, a new technology, our advanced autonomous driving assisted technology, and also charging platforms, I think we can offer a premium product to our customers. That's how you stay ahead of the competition.
Brian, extremely short term, you're in Shenzhen. It was in lockdown a few weeks ago. Shanghai is in a lockdown right now, partially, of course. Are you seeing any impact on sales currently for this month?
Well, I think the lockdown in some of those major cities have direct impact on the number of cars we can deliver to our customers. And I think, we are, I would say, impacted by thousands of numbers. If without these measures, I think we can actually perform probably better. But I think that's reality these days. Operating China, you just have to be very nimble. You have to really do your logistics, do your delivery services and production schedule based on the real-time feedbacks. And that's how we operate these days.